Hi, my name is Martin Koehring. I'm the head of the Economist Group's World Ocean Initiative, which imagines an ocean in robust health and with a vital economy. The World Ocean Summit is an integral part of the work we do on accelerating a sustainable ocean economy. You can find out more about the initiative's work, including the coverage of the key themes discussed during the summit, on our website ocean.economist.com. So welcome to our finance-focused plenary session today on driving investment into natural capital to increase coastal resilience. It's such an important topic. I mean, coastal habitats play a key role in protecting against ocean risk and also in providing resilience for coastal communities. However, investment is required to protect and restore these vital ecosystems and this important source of natural capital. In today's session, therefore, we would like to explore what is deterring investors from focusing on nature-based solutions and how to mainstream investment and how mainstream investment can be channeled towards ocean preservation. So I'm very excited that I'm joined today by four excellent, very experienced panelists. First of all, we have Karin Kemper, the President and Chief Executive of Ocean Unite. We have Karin Kemper, Global Director, Environment, Natural Resources and Blue Economy at the World Bank. We have Emily Landis, Coastal Wetlands Strategy Lead at the Nature Conservancy. And last but not least, Alistair Clark, Managing Director, Environment and Sustainability at the EBRD. You will find the full biographies of all of the panelists on the screen under this media player. And I'd like to structure today's conversation in three parts. First, I'd like to start with recent developments in blue finance and coastal resilience. And then we would like to move on to talk about how to accelerate blue finance for nature-based solutions. And finally, we'd also like to look at new blue finance innovations and how to grow the pipeline of potential products. So without further ado, I'd like to start our conversation with talking about recent developments in blue finance and coastal resilience. And I'd like to start with Emily. I mean, given the great work you're doing at the Nature Conservancy in this field, we have salt marshes, seagrass meadows, mangroves, and other coastal habitats that provide vital ecosystem services. But coastal natural capital is also under threat from development, for example, from pollution, from erosion, from sea level rises, and other threats. How is the Nature Conservancy helping to value the climate mitigation adaptation benefits coastal habitats can provide?
Yeah, thank you so much. I appreciate being here, and it's lovely to be with this great group of panelists. So just really quickly about the Nature Conservancy. We're a global environmental nonprofit in 74 countries. We work with a range of partners from local communities, governments, and businesses, and we really do try to deploy the most innovative conservation solutions for climate change. In terms of our ocean solutions, we have three financial mechanisms that we think are really helping us achieve scale. So I'll just go through the three of them quickly. So first is blue bonds for ocean conservation. What we found is that a lot of countries do actually want to make the investment to be more resilient to climate change, but their dependency and the increased frequency of storm surges due to hurricanes and other climate-induced threats have put their economies at risk. But many of these countries also share another common challenge, which is high national debt load compared to their GDP. And so what we decided was to take that kind of problem, debt, and turn it actually into a solution. So TNC helps refinance a portion of a country's national debt, often purchasing it at a discount, and then we restructure it with better interest rates or terms. And then in return, the government commits to protecting about 30% of their ocean and use a multi-stakeholder driven marine spatial planning process to determine where that 30% will be. And then we develop a conservation trust fund to administer the transaction and manage and disperse the funds to support marine conservation. Our first place where that's been successful is in the Seychelles. We're trying to expand that now to 10 more countries in the next 5 years. So it's quite ambitious, and we're moving quite quickly on that. The second thing that we've been working on is the blue carbon resilience credits. We are working with industry leaders, including AXA XL and Karin Kemper through Aura, on developing the first blue carbon resilience credit. It's the only carbon credit to value coastal wetlands for all of their benefits, so sequestering carbon and increasing coastal resilience. The resilience credit will be a new methodology to advance the United Nations Sustainable Development Goal SDG 13, which is on climate action. The credit will be generated through restoration or conservation of coastal wetlands. And Vera, which is the one that organizes and manages the standard, will be the one that verifies it. If you guys haven't heard of it yet, that's fine, because it actually hasn't been done yet. So just like kind of to set the scene of what this would look like. So TNC would work with the local community and government buy-in and would restore like a mangrove swamp, or I think you use seagrass meadows as an example. And the carbon stored would generate an offset. The community around the mangroves would see a reduced impact from flooding, and that would generate a resilience credit. Those two credits would be put together and sold at a premium to a corporation that wants to lower their carbon footprint, but also wants to see resilience. And so we see that this is actually something being pushed to us by the insurance sector. They really see the value and the demand in purchasing offsets this way. So that's kind of our way that we're actually bringing mitigation and coastal resilience together. And then our last innovative financial solution for oceans is insurance. So as our climate changes, we know that protecting and restoring natural infrastructure is really important, but what happens when our natural infrastructure fails? And so we've decided to actually insure our natural infrastructure, like coral reefs. And so we've done that in Mexico, in Quintana Roo, where we've actually put a parametric insurance policy on the reefs in front of the hotels, noting that the benefit that they provide. So, and we're also now expanding that into thinking about mangrove insurance, and there's no reason to think that we can't explore it for other coastal habitats as well. So those are our three. So thank you. I'm happy to discuss more.
Thanks a lot, Emily, for highlighting what you're doing at the Nature Conservancy. It's great to see so much innovation in this space. And I'd like to ask Karin now from the World Bank. Emily already mentioned, that a lot of countries have a high debt load. There are already lots of challenges, and now with the pandemic on top of that, there's a lot of pressure, but also the need really to continue to invest new capital. So that there needs to be this massive influx of new capital if we are really to sustainably develop and protect our coastal zones, as Emily mentioned. How can we attract new capital, and what is the World Bank's role in making this happen?
Thanks a lot, Martin, and thanks for the invite to be on this really interesting panel with such pertinent questions today. In the World Bank, we already have a significant ocean portfolio. It's about 5.5 billion, and we have another $1.5 billion in the pipeline. And our work focuses on coastal resilience, sustainable coastal tourism, improved waste management, but also we focus on plastics along the entire value chain. So that's a big portfolio, but of course it is not enough. As you just said, there are enormous needs at the moment, and if we really want to reach the goal of sustainably managed and really healthy oceans, we need to have much larger sources of funding. And one source, of course, is to bring in private capital, in addition to the public angle that the World Bank can bring to the table. And that is how we try to leverage our funding and to attract private capital. There are a number of initiatives that we can do. We heard a little bit on some things that Emily talked about for the Nature Conservancy, but I'd like to focus also on the enabling environment that we need to have if the private sector, which has a huge role to play, is to come in. And one preliminary step that really needs to be taken is to build the right regulatory framework that will help address concerns that investors might have, that ranges from the fiscal regime to clear property rights, but also to repurposing subsidies so that they fuel sustainability rather than over exploitation. And one could think, for instance, instance, in terms of fisheries subsidies, we all know that there's a lot to do and one would really need to shift them. So in that sense, it's very important that we all pull in the same direction and follow the same rules in order to make it smoother for actors to come in. And for instance, in the climate discussions, the frameworks such as the TCFD have been very important. And in the blue economy, we have been a partner with various others on the sustainable blue economy financing principles. And those 14 principles call for ocean development to be based on sustainability and integration. And this type of approach then helps to build resilience, and particularly with what we think will be a very lengthy economic recovery from COVID-19. One of the examples of applying the principles is, for instance, the World Bank's Indonesia Sustainable Oceans Program, which is aimed at supporting rural coastal livelihoods and strengthening marine resource management, including fisheries, reduces marine pollution and building coastal resilience. The joint value of that project is 225 million, and it has multiple sources, both from lending and from grants. And maybe just to finalize, we very much appreciate the work of the high-level panel on oceans, where one of the key recommendations is on integrated ocean management. And we think that that will also help with a planning and an understanding process of countries' EEZs, and that in turn will help to bring investors in multiple sectors that are related to the ocean, but to do that in a sustainable manner. So let me leave it at that for now.
Great, thanks a lot, Karin. And you highlighted how important it is to bring in multiple stakeholders to integrate the private sector and public sector and development banks and so on. And actually that is very relevant for what I would like to ask Karin as well, because you obviously do a lot of work in bringing different stakeholders together. You know, the Ocean Risk and Resilience Action Alliance was set up to bring together multiple stakeholders and efforts to drive investment into coastal nature. Could you please give us a quick update on the Alliance and what you have identified as some of the key barriers to investment into coastal nature-based solutions?
Thanks so much, Martin. It's really lovely to be joining everyone today on this fascinating panel. Ocean Unite is a global nonprofit that was set up about 6 years ago to focus on protecting at least 30% of the ocean by 2030 and building resilience globally. And we've been partnering with AXA's Ocean Risk Initiative for about the past 5 years, initially to convene the 2018 Ocean Risk Summit in Bermuda, which brought together about 200 stakeholders from finance, insurance, academia, government, and civil society to begin to address the question of ocean risk and what it means in terms of national accounting, as well as potential threats to the private sector, to their asset base. And as a result of that, we pulled together with a number of partners the Ocean Risk and Resilience Action Alliance, or ORA, which is really an ambitious initiative bringing together multiple stakeholders to pioneer finance and insurance products that incentivize investment into coastal nature-based solutions and provide returns for investors. Our collective power is really driven by the collaboration between and amongst our members to accelerate, scale, and replicate action and realize the value of the ocean as a critical asset through tackling threats to biodiversity that are contributing to climate change and also contributing to climate adaptation and building resilience. We've got an aim of driving about $500 million of investment into nature-based solutions by 2030 and surfacing at least 15 novel finance products by 2025. So the Alliance was formally launched in 2019 at the UN Secretary General's Climate Action Summit. It was also endorsed that year by the G7, We had about 7 full members to begin with, and I believe we're now up to around 35 members from the private and public sector and civil society, and that includes partnerships with UNEP FI on their blue finance principles that Karin was talking about, as well as the IUCN and TNC. The full list of members is available at oceanriskalliance.org. Last year, the Government of Canada, which has been a cornerstone partner for the Alliance, provided seed funding, and so we've been able to support 8 projects in geographies including the Caribbean, Southeast Asia, and the Pacific. Again, that full list is on our website. We've got a pipeline of about an additional 10 projects in the works, and we've run an innovation challenge to surface more. Each project really brings these different sectors together to collaborate, generate knowledge, derive investable products, and leverage public funds to significantly scale private investment. And each needs to show that it's workable elsewhere and at scale. So a great example, which leads into what Emily was saying earlier, is the work that TNC has been doing on developing parametric insurance measures. We are now working with TNC and UNDP to see where else those kind of measures around the world can be deployed, and with the Inter-American Development Bank and the MAR Fund to look at testing, and actually Willis Towers Watson, to look at testing some more parametric insurance measures in the Mesoamerican region. In the work that we've done, we've identified really 4 primary barriers to investment into natural capital. The first is a lack of understanding of how investing in natural capital can provide a timely and productive return, especially in the short term. The second is really this limited pipeline of risk-adjusted investable products that can attract financing. And Karin spoke to that earlier about how we can attract and crowd in private finance, and the need to generate the enabling environment to do that. The third key piece is that there's really insufficient data and modeling capability for investors to quantify ocean-derived risk and then look at what that means in terms of where their investments and assets fit within that kind of context. And then finally, there's inadequate enabling policies to shift investment away from unsustainable infrastructure and into the kind of green, blue investment parameters that we're looking at. So through the work of the Alliance, we are trying to address each one of those, but I'm sure as well that all of the colleagues on this panel are trying to do the same, and this is what we need to do collaboratively so that we can really infuse capital into nature-based solutions in the ocean sector.
Great, thanks a lot, Karin. And you have highlighted very ambitious plans, of course, for the Ocean Risk and Resilience Action Alliance. And on top of all of what Karin mentioned on the World Bank and Emily on TNC, and now I'd like to bring in Alistair from the EBRD to ask what is happening at the EBRD and how that fits into the wider ambitious plans that are happening. And obviously, the Sustainable Blue Economy Finance Principle already mentioned by several of you, and the EBRD actually recently has become a signatory of the principles. What were the drivers for EBRD to develop its blue economy concept, and what value add do you expect out of it for the region you invest in, Alistair?
Thanks, Martin, and thanks for the invitation to participate in this great panel. Indeed, we have recently, in December, become an official signatory of the principles. And you asked why. Well, we think it's very simple why we were interested. We think it makes perfect and good economic sense, as the blue economy is critically important for many of our countries in our region, whether it's sustainable tourism, maritime transport, logistical infrastructure, renewable energy generation, fisheries, and indeed extraction of marine resources. These are perfectly relevant for our region, in particular the Mediterranean, Black, Baltic, Red, and Caspian seas. So I can keep my answer fairly short, but it's basically, if we want to build a competitive, green, and sustainable economy, inclusive for all, then the blue or ocean economy is just a natural part of these efforts. Our region is extremely diverse and at the same time facing substantial environmental challenges with high carbon intensity, a legacy of heavily polluting industries with low value added, absence of supportive environmental policies and regulatory systems. So in our EBRD region, which encompasses several of the most polluted and heavily exposed water basins in the world, the Baltic Sea, the Black Sea, Mediterranean, Caspian Seas, all of these have a legacy of environmental issues. And at the same time, these natural capital assets play a critical role for a number of our countries in the region. So for us, with a mandate to be substantially majority green by 2025 in all our investments, we cannot ignore the blue economy. So it does become an extremely part of our portfolio of activities. And I'll leave it there and then come on to some of the more specifics later. Thanks, Martin.
Brilliant. Thanks. Great. Thanks a lot, Alistair. And it's great to see that the EBRD is so active in this space as well. And I mean, hearing from all of you about recent projects and the exciting work you're doing is very encouraging. And obviously, we would like to move on to the next topic to really identify how we can accelerate blue finance for nature-based solutions. So I'd like to start with Karin. There's recently been a lot of talk about building back better, cleaner, and bluer. Lots of new impetus through the new Biden administration, of course, in the US, for example. But how can decision makers apply a blue lens to their investments?
That actually is an issue that's quite a lot on my mind, Martin, because what we are seeing is worldwide there are trillions of dollars that are spent on stimulus money, and that can be a great opportunity to apply a blue lens. But it can also happen that if there is no blue lens, that there could be quite a lot of detrimental investments with all of that money. So what we do now will define the future for generations to come, and that's why it is so important to use the blue lens. So there are some examples one could think of that are perhaps for those who work in the ocean space, they are maybe quite obvious. But for instance, there is a strive right now, which is very important, that jobs are created with the stimulus money, and very labor-intensive jobs are very good at the moment because a lot of people have lost their livelihoods all across the world because the economic situation is so bad. So, for instance, you could imagine in the coastal zones when you are trying to protect your shorelines, that instead of doing that with concrete, which we know is not very good for coastal health, that you might do that with hybrid and nature-based infrastructure, such as healthy mangroves and restoration of coral reefs. That can create a lot of jobs as one goes along and does that. And at the same time, one has a win-win on both protection for future events, but also protection for the oceans. But one of the things that many don't think of immediately when they think of stimulus money is, for instance, in the solid waste sector. One often doesn't think about that can actually create a lot of jobs, and that it could be a proactive part of the stimulus packages and could have a very good impact on the oceans. We just heard from Alistair about the many polluted large rivers in Europe. So if one had waste management and wastewater management investments, they would then also be positive for the oceans because the pollution doesn't then reach the ocean. So there's a lot of ways of putting a blue lens that once one thinks about it are actually very straightforward. Others are, for instance, in tourism. Can we find more sustainable forms of coastal tourism, especially now during a time when social distancing means spaces at a premium? So perhaps not as intense tourism in the coastal zones, and maybe a last example is in the fishing sector. It's of course very important. 20% of protein intake in developing countries comes from fish. So it's very important from that lens to preserve the fish stocks. And there, if you put a blue lens, for instance, we had examples at the time of the 2004 tsunami when investments were made in communities for them to get back up on their feet to majorly invest in fishing, but they weren't really originally fishing villages. So what happened was it led to overfishing in those areas. So with a blue lens, if one had looked at the stocks, that might have averted that. And we can do that because we now know about it. So lots of things we can do within stimulus packages to make them bluer, or to direct investments directly into blue choices.
Great, thanks a lot, Karin, for highlighting how important it is to take this blue lens, but also to look at solutions such as mentioned water management that are good for the recovery, but also good for the ocean. But it does raise a question there about what is really sustainable, and do those investments really lead to sustainable outcomes? And I'd like to ask Alistair about this, because one of the challenges for accelerating finance for nature-based solutions and for blue finance more broadly is the lack of a clear blue taxonomy, the kind of definitions, what is actually sustainable. And could you tell us a bit more about how the EBRD is collaborating with other organizations to accelerate progress in this area?
Thanks, Martin. Well, first of all, we do collaborate with all our peers. So communication and collaboration and all relevant market counterparts is a really necessary ingredient for success, particularly when we have a complex, fragmented market here with challenging opportunities. So we can only benefit from lessons learned from our peers and maintain a close communication at the operational level with our colleagues from the other MDBs, such as the World Bank, ADB, and EIB, who are also committed on the blue economy opportunities. In particular, we do follow and actively contribute to all European environmental initiatives, including but not limited to the development of the EU taxonomy, which encompasses a separate objective on the sustainable use and protection of water and marine resources. So we are part of what's called the TEG, the expert group, and are looking forward to contribute on development of screening criteria and technical thresholds related to this objective, as well as to implement the do no significant harm principles. It's probably the area which all of us have in our hearts, but it's good to see it actually being part of the EU taxonomy as well. So the do no significant harm principles we apply to all of our operations, whether it's the blue economy or outside, but it's a really important part of our work. But our collaboration goes into practical initiatives with other different counterparts too. Building on the successful cooperation on ballast water management partnership, the EBRD is currently working with the IMO to address marine biodiversity under the GLOW fouling programme, and will undertake economic impact assessments of biofouling and invasive aquatic species in Ukraine and Tunisia. This follows on from other studies that we've done, particularly in the Black Sea. So in October 2020, the bank, together with IMO and the World Bank Group, we initiated the FinSmart Roundtable. This is a platform for regular dialogue among key maritime stakeholders on addressing the financial challenges relating to the transition of shipping to a more sustainable and resilient future. The roundtable will particularly focus on developing countries to accelerate financial flows for shipping and decarbonisation of the maritime sector. So our partnership is also being extended to topics related to green maritime transport through a mapping study of maritime sectors in Turkey. The bank will also explore joint solutions to address the issue of the 8 million tonnes per year of marine plastic through the GLOW Litter Partnership, and in meeting commitment towards relevant climate change and energy efficiency goals for international shipping. So in summary, I think it's through partnership and by the use of, the issues such as the EU taxonomy will really help us develop these themes for the future. So thank you, Martin.
Great, thanks a lot, Alistair. And it's so important to to make sure that finance goes into the solution that really help to build a sustainable ocean economy, and having these kind of clearer definitions of what is sustainable. So blue taxonomy is really crucial, building on what Karin already mentioned in terms of applying this blue lens. So then we get to, we have the blue lens, we have the blue taxonomy, we have these developments, but one of the key challenges in driving private investment into coastal nature-based solutions is finding a commercial return on investment. And Karin, you mentioned that earlier, how important it is to find this commercial return on investment. How can this return on investment be found, and what could be the role of blended finance, for example?
Yeah, thanks, Martin. I have to kind of start off by just mentioning taxonomies. When you come from the ocean world, we think of taxonomies in terms of species and ecosystems, not in terms of banking. And so it was such a shock to me when I realized that bankers and finance people thought about taxonomies as well. But it's really important in terms of organizing how we think, and for that's part of the translation that we need to do from our two worlds to understand how these things are going to work. And that really gets to the issue of how we manage to crowd in private sector investment. And I think we need to be quite honest that there are some situations where we're just not going to be able to get private sector to invest in coastal nature-based solutions or ocean solutions. And for those, we really need to see the public sector stepping up and mobilizing resources, because the risks of not investing into those nature-based solutions, from the destruction of communities and livelihoods to displacement and migration, are just too high not to act. Earlier, Karin spoke about harmful subsidies, and I think there are about $35 billion a year going into harmful fishery subsidies. So we're not talking about fuel or anything else at the moment. So we need to think about how we can repurpose that public sector funding into building biodiversity positive outcomes. But there are other scenarios where there are clear opportunities for the private sector to engage. And this is where this blended finance becomes critical. We need to think about how pulling together concessional finance, loan guarantees, ODA, or grants through philanthropic investment can come together and act as some of the catalytic first loss finance, which will create a positive investment environment, helping to de-risk private sector investment and crowd it in. And I think that's they're especially important, all of those elements, as well in building that enabling environment, supporting the training and capacity building that are often required for early stage project development. So we also, in thinking about all of this, need to think about the types of investment that can generate commercial returns. And in addition to blending the finance elements of the projects, we also need to think about how we can blend different pieces of investment. So again, Karin was talking to this earlier. How about investments into offshore wind, which can more easily generate a commercial return, and blending that with requirements to restore mangroves or cover the costs of marine protected areas. So we can begin to intertwine these investments into nature with investments that build forward better and more sustainably. I think the Inter-American Development Bank's Natural Capital Lab is a great example of where, since 2016, they've leveraged an additional $55 million for projects that have been deployed alongside new IDB resources, many of which have looked at developing new financing models for the private sector. So we know this can be done. We've got to start thinking outside the box so that we can leverage the power of the finance and insurance sector to innovate and really think about how we're talking about conservation finance rather than finance for conservation.
Great. Thanks a lot, Karin. And you mentioned how important it is to think outside the box on blue finance, and blending these different sources of finance together is a great way to do that. And Emily, you had mentioned earlier TNC's Blue Carbon Resilience Credit. So what challenges are you facing in the practical implementation of innovative blue finance solutions, such as the blue carbon resilience credit, and what are your key lessons to accelerate blue finance for nature-based solutions?
Yeah, thank you. And I appreciate what my colleagues have said, because it's very similar challenges as what is being expressed here. So what often I find deters investors is they don't have the right information. And what then happens is the blue economy isn't really integrated into their sustainability decisions. And so then we have a chronic underinvestment of ocean-based solutions. And so then when we're trying to make these new innovative solutions and we're on the front line of developing them, when we go to these either philanthropic or impact investors, they're really excited about it. And then the time comes to hear how much money they want to invest in it, and they say like 50,000, and then they want a return in 2 years. And so that's just not what's going to get you there. So we need to have more significant startup funding to really get this stuff working. I mean, you would never ask Elon Musk to develop the things he develops with $50,000 and return it in 2 years. And yet I find that the conservation community is being asked to do that. And so what happens is you're not going to get the innovation with those kind of deadlines and those limited funds. So I would really push that we need that patient capital and the blended capital approach to be able to get this to scale. And then in the more practical, kind of on the ground, with the Blue Carbon Resilience Credit, we have one project that we're still conducting feasibility and hoping to get to market in the United States in the Virginia Coast Reserve. And it's one of the largest eelgrass restoration projects that have been done. We have over 9,000 acres of eelgrass that have been restored. It's been a success story because we've had amazing partners like the Virginia Institute of Marine Science, the University of Virginia, and the government. But even with all of the amazing enabling conditions for a perfect project, it hasn't been perfect. So some of the kind of in the weeds things is data availability. So even in the United States, where we've been monitoring carbon and carbon fluxes for decades, we still spent 2 years gathering data. So when you think about countries that do not have that kind of data, especially in developing economies, this is hard, and there's already gaps in resources. So it will take significant time to build up the science and the carbon science to do this work. Second is land tenure. Coastal systems there's very unclear land tenure definitions. Some places, there's rules where the coastlines are owned by the government. In other places, it's owned by individual landowners. It can make either situation makes it very difficult to do blue carbon resilience credits. So in the case of Virginia, it was actually owned by the government. We had to pass a law in the state to allow to do carbon markets. This actually went pretty smoothly in the US, but in other countries where there's even worse bureaucracy, that could take even longer. And then I think that the other thing is, again, thinking about the risks. So because we are expected to turn around with shorter timeframes, sometimes we pick the low-hanging fruit instead of the one that's the big opportunity, like the thousands and thousands of acres that you could possibly do, because we need to provide this company with offsets in 2 years. And so what you end up getting are smaller pilot projects that we know will guarantee, we can guarantee will deliver, versus those ones that are much riskier that may not deliver, but the return on investment would be huge if it works out. So Virginia's is a very small project, and the amount of carbon that will be generated will be small in comparison to the overall opportunity if we had the impact investment that we really need of hundreds of millions of dollars to make this really work. So I am positive that this is going to be an amazing opportunity, an amazing solution, and it's part of a portfolio that the Nature Conservancy has. But I do think that we need to be realistic that we need to up investment if we really are going to want to be innovators in ocean-based solutions.
Great, thanks a lot, Emily. And you highlighted so many innovative ideas, and it's really been inspiring to hear about these kind of approaches that each of your organizations have, and also the need for multi-stakeholder approaches and bringing public and private sector together, really, and finding the investment, but also defining what sustainable investment is. Unfortunately, we have run out of time, but it has been great to hear from you all in terms of what your organizations are doing. I mean, the need really to find a blue taxonomy, to really define what is a sustainable investment, to apply a blue lens. And we can only really apply this blue lens, as many of you said, if we can define what is sustainable. And obviously, as you also mentioned, Emily, this kind of lack of information that often investors have, and often blue economy investments are not integrated into the wider kind of green investment plans. But now this opportunity that has arisen through the crisis and the post-pandemic investment also, opens up this opportunity to invest in blue solutions, applying this blue lens in, for example, nature-based infrastructure. And you mentioned examples of combining offshore wind with mangrove restoration and those kind of integrated solutions. So I'd just like to thank you all again, to the great panelists for their time. I mean, this has been an amazing contribution, and there are so many more topics we could talk about, and obviously you can check in the biographies of each of the speakers as well the projects they're working on. And I would really like to encourage you as well to check the World Ocean Initiative's website, ocean.economist.com, where we will be covering many of the topics that were discussed today on applying this blue lens, on blended finance, and those kind of topics that really highlight how important it is to invest in natural capital and apply this for coastal resilience, of course. So I'd really like to thank again the panelists, and I would like to ask you to continue to enjoy the rest of the summit, and remember to check relevant content. And thanks again, everyone, for being part of this great conversation.